We're Compound Everything. We talk money, markets, and investing. And today we're going to do a couple book reviews. We're going to cover 4 books that we've read since the beginning of 2025.
Mm-hmm. So, do you want to start? Do you want me to start?
I guess I can start.
Sure, go for it.
We'll
go one for one.
Okay, sure.
So what's your book?
So the first book I'm going to do is Competitive Strategy by Michael E. Porter.
Okay, I want to just preface this by saying I heard a lot of good things about this book, and I think I compelled you to buy it off Amazon because I was like, oh, look at this book. I've heard a lot about it. I've heard a lot about how it's good for dissecting businesses and whatnot, and so I haven't read it yet, even though I asked you to buy it from Amazon. So you read it, I haven't. How did it turn out?
This book was not a cheap book. Like usually books are like $20 to $30 Canadian. This one was like $55 Canadian. So I was like, okay, I'll buy it.
Did we get our money's worth?
And it wasn't just you who compelled me to get this. I hear a lot of podcasters talking about this book. They talk about Michael Porter's 5 Forces all the time. So that compelled me to buy the book.
Okay.
I did not enjoy it. I hated it. Like, it's one of those books that everyone talks about, and so you think that you should read it. And I start to wonder, like, if these authors pay people to talk about it, or if it's one of those books that's like super popular in an industry, so then everyone says they have to like it because it's like that's like the cool thing to say. And I just found, like, as an investor, maybe if I ran a business, I would read it differently. But it read like a textbook. And textbooks are terrible teachers.
Yeah.
We all know that. Like, textbooks are written terribly, and it read like a textbook. And honestly, you could literally just sum up that entire book, say $50, sum up the entire book by listening to other people dissect the 5 forces.
Right.
Listen to an interview. I think that podcast I'm talking about does do an interview with the author. Listen to him. You get more out of that interview than you do out of the book, and it's free. I can just sum up now, essentially. So there was kind of like 3 generic portions of the book. Now, I will say I didn't actually read it in its entirety because life is short and time is scarce.
Well, if you didn't like the book, what's the point of finishing
at about a third of the way in, I just started skimming it. Because I was like, this is just wasting my time. This is not going to make me a better investor. Everything I was reading in it, I had already learned from hearing other people talk about it. So from what I got from skimming 2/3 of the book and reading 1/3 is the 3 generic strategies are cost, leadership, so like be the lowest cost producer, or be different, and really focus. So either be this or really focus on your target audience, or be different. And then the 5 forces are threat of new entrances, bargaining power of suppliers, bargaining power of buyers, threat of substitutes, and industry rivalry. So the way I would sum up this book is that companies win by having a clear competitive strategy and by really focusing on that strategy and on their uniqueness and really defending it. That's it. It's pretty much a more in-depth book on moats. And I just think that there are better options out there if that's what you want to learn about.
So did it make you come to the realization there's other moats that you didn't know about, or to think about moats differently, or did it offer you any strategy that differed for picking new stocks now to make it worth the $50 we spent on the book?
Okay, so I guess I mean that's really cheap if you think about it.
Well,
if it even makes you any money.
I was going to say if it allows you to choose a company because it has a strategic advantage, because you read it in a book that cost you $50, it's maybe money well spent.
Yeah. Now, I guess in defense of the book, like I had already listened to interviews with him, so maybe reading it to me was just so redundant, and that's why I didn't like it.
So you just didn't learn anything new from the book.
I didn't like the writing style. It was very textbooky, and then I was like learning nothing new because he was kind of just showing why all this worked and like studies and this and that. And it's like, oh, okay. I don't know. It just, it was one of those books I felt like it would be important if someone was testing me on it.
Mm-hmm.
But I don't know. It just, but maybe one of the things I'm more keen on now of thinking are one, threat of new entrants. Like that is something I do think more seriously on after reading that, but also the bargaining power of the buyer. I never really thought of that
So what does that mean exactly?
Right. So if I go to the store and I'm looking for, let's do makeup, because makeup's just going through it right now. Elf just had a 20% drawdown. Estee Lauder has been slowly dying for the past year now. And so if I go to the store and I'm looking for a moisturizer, what is my bargaining power to companies that I hold as a customer over companies? And what that means is, like, am I willing to buy the Estee Lauder night cream for $150? Or am I going to go one line less and spend $100? Or I'm going to go 4 lines less and spend $20? And a lot of times, especially now, the lower brands have, if you look at the ingredient list, they literally have the exact same ingredients. And so
You've shown me that, yeah.
Yeah, and so you can do the lower brands for less money, which means I am as the buyer, am now going to be putting pressure on Estee Lauder's prestigious line, because it's like, I don't want to spend $150 when I can get almost the same cream for much, much less. So therefore, what is the bargaining power? How easy is it for your customer to be like, I'm going to buy something else because it's pretty much just as good. That gives the customer a lot of power, and you don't want your customer to have that power. You want to be able to increase your prices, and the customer says, no, this product is so good, I'm not actually willing to go with the lesser one. And that just gives your buyer way too much power, and that can erode your profits, and that can erode your moats. And that's what he said. So like, Michael Porter is a very intelligent person. It's just that the way the book was written, it wasn't my thing. And with that, the threat of new entrants, I think combined, I think that what that book really did was take those two ideas for me and really like put them to marry them together. The other sector I think of is the energy sector, like drink sector. There's no barrier to entry anymore, really.
No.
Right? And again, the buyer has a lot of power. And so I've just noticed that those two ideas, the threat of new entrants and the power of the buyer, when you marry them together, you can see how that really erodes sectors into not being worthwhile investments.
Yeah, and like you said, we've seen that in the makeup industry and whatnot. Alcohol's another one. I mean, you see a lot of celebrities coming out with their own alcohols, and we've dealt with that in prior episodes of our podcasts or shows. You can see that happening in real life.
If you just know Porter's 5 forces, and you just listen to interviews with them, in my personal opinion, you'll get a lot more out of those interviews than you do out of reading the book.
Yeah, I know exactly what you're talking about, how things read like a textbook when they start to cite proof and stuff like that. I'm reading a book like that right now, actually, which maybe we'll review on a future podcast. Yeah. But he goes through all these reasons why his strategy should work and cite studies and this and that and the other thing. And it's sometimes that's okay, but I often just want him to make his point.
It gets to be too much. Yeah. And I just wish, like, some authors, it's like, put that in the appendix. Like, just make an appendix of all your site sources, because as a reader, I don't care. And I don't know if it's like a pride thing for some of these guys. Like, they want to, and I think it might be like, they did this and they found all this and this is kind of like their baby, and that's fair. Like, it's their baby. But as a reader, I'm like, I'm not getting an exam on this. I don't need to memorize all the little intricacies of how you found this to be true. I just want to know what it is and how to implement it in my investing.
I don't think it's so nefarious as that in many ways. I think it's actually, with a lot of these guys, they are academics, so they write like they would normally write for a journal.
I guess so. I just find some academics to be like...
dry.
Yeah.
I mean, maybe there's some sort of self-inflationary stuff going on there, but at the end of the day, I think some of these guys just write for journals, so they just expand that writing as to how they normally write in their textbooks.
They've done so many academics that they've had to write for teachers.
Sure.
And they had to write in a certain way as to get a particular grade. And now that way of writing is so ingrained in their mind that they forget, like, they're no longer writing for an A+ or for a professor. They're actually writing for an audience that just wants to know the facts.
Sure.
So maybe it's just hard to break those neural networks.
Okay, so in summary, yay or nay?
So in summary, out of 10. So we're gonna give all these books a rating out of 10. I'm going to give it a 3.
Oh, wow.
Yeah,
okay.
A 3. It was just, the topics were good, but the way it was written was so horrific. I think you can find those topics in ways that are better than taking the time to read Competitive Strategy by Porter.
Okay, interesting. All right. Yeah. So my book is The Complete Turtle Trader. So it's by Michael Coble.
That was a cheap book, because I read
this was an inexpensive book, and I don't know how we got on this.
You know, we often find books on socials that people post, and we'll like take a screenshot, and then eventually when we don't know what to read, we'll be like, oh, let's go through the screenshots of books that people have recommended. Yeah.
So for those of you that don't know, it's actually a really fascinating story about they're called the Turtles. And the Turtles came as an experiment, actually. So there's 2 traders, Richard Dennis and Bill Eckert. So back in the day, Richard Dennis, I guess, had this concept that you could form a good trader. Now, he was a very good trader himself. He made something to the tune of $400 million trading, futures and commodities and that kind of thing. And this was in the 80s. And he, I guess, had a thought that, or a question in his mind, was trading, the innate ability to trade, is that nature or nurture? So is that just something that was specific to him and his innate ability, or could he teach others how to do what he did or what others were doing? And there apparently was a bet between Richard Dennis and his then business partner, Bill Eckert, as to whether or not it was nature or nurture or whatnot. And so apparently, according to legend, Richard Dennis said, yes, it's something that we can teach. And Bill Eckert said, no, that's not something you can teach. And Bill Eckert has since come out in a podcast I listened to even the other day and said, I never said that. It's like, why would I say something like that? But he said, maybe I said something a little bit more gentle than that. But he said that
he defended himself.
He defended himself. So this gave rise to an experiment. And the experiment was they took about 23 novice investors. Well, I shouldn't say novice. There's people who had experience in the markets, and there's people who had like zero experience in the markets. And there was some, older individuals and some who were quite young. I think one of the youngest was like 19 years old at the time. And so they taught them over a 2-week, basically, boot camp. They did a 2-week boot camp for these novices and read them the rules and, how to trade futures and commodities and whatnot. And they developed a system of rules, and they threw them into the futures market and said, here you go. And actually, the funny thing is, it seemed like it was actually very hands-off for the most part. They would be given certain data points, every morning, and they were to go and trade these rules that they were provided and basically go and make money for Richard Dennis and Bill Eckert.
And they did well, right?
And they did extremely well, like to the points of like some of them I think made 100% in a year, or they did phenomenally well. It was like a runaway success for many of them if they followed the rules. Now, the book itself is actually a very entertaining read. It's a bit of a biography.
I loved it. As a book to read.
Yeah,
as entertainment. I loved it.
It was not very challenging read for the most part. It was a lot of biographical, I guess.
It was just easy.
It's just an easy read.
Fun read.
Until you got to the strategy. Mm-hmm. Once you got to the strategy, that's where things got a little bit more difficult to appreciate and comprehend as I was reading through the book. So the idea behind the book was to, again, provide a biography. But one of the things that does seem to purport in the book is, you read the book going, okay, well, what is the strategy? And the author does outline the strategy a little bit in the book, but it's extremely hard to follow, in my opinion. So I was trying to figure out what their risk management strategy was, what their entry points were, and he did allude to that, but it wasn't enough that you as a, maybe a novice investor could go and then take this information and apply it yourself.
So did you find, when I read it, like I said, it was a great entertaining read, but it was a frustrating read because the way they market the book makes it sound like they're actually going to teach you what they taught the turtles, but you end the book going like they purposely either they purposely left out some pretty specific information, or the author, what's his name, Michael Covel, didn't know the specific information.
Sure.
But I just didn't like, which is okay.
Yeah.
Like it's a fun book to read, but I just found like the advertising or the marketing for the book was a little misleading.
Sure. And he does have a website, and maybe he will go through some of that on his website. In fact, I did find a paper on his website that was about a 30-page read by one of the actual turtles. His name is Curtis Faith. And he outlines a lot of the rules and clarifies some of that. So if you're actually interested, you can go on there on his website, or even Google Curtis Faith, and there's a PDF about 30 pages long that outlines a lot of the rules. And if you take those rules and supplement them with this book, you can kind of figure out what they were doing to a point. I don't know if it's enough to, actually go and trade, or they just give you enough rope to go and hang yourself with. I don't know.
Is it enough to risk your own capital?
I don't know if it's enough to risk your own capital. Yeah. But one of the things I found that was extremely valuable about this book was their risk management. So the turtles were all about risk management and essentially not blowing up. And so they did that in really two ways. They did it in position sizing, and they also did it in terms of stop losses. So we as traditional value investors have kind of shunned stop losses and, exits to the downside, right? We struggle with exits to the upside too, But they really had a firm idea of when they were getting out if the trade started to go against them.
And traders we have learned a lot from traders.
A lot from traders, especially recently.
We're long-term investors, but we have really noticed that the rules that traders use are invaluable. And I haven't heard, like, we listen to a lot of podcasts and read a lot of books and a lot of papers and everything else, and I haven't heard a lot of value guys or, like, you know, wonderful companies at fair price guys. I don't know what you want to call that. I guess GARP. We haven't heard a lot of them talk about, like, risk management, like, really in depth and all that. And I feel like they leave novice value guys kind of in the dark there. And so you almost have to learn risk management from traders, because traders are much better at risk management.
They're very risk averse, oftentimes. The successful ones, the ones that blow themselves up, I mean, maybe not so much. But in terms of risk management, it goes back to portion sizing and stop losses. And so their stop losses were based upon a calculation they did day to day based upon volatility over the past little while of the stock. So they didn't want to get falsely stopped out, although they would. Sometimes they would get stopped out and then the signal would be go back in, and the rules, if they followed them, would be to get back in. And so it was interesting to see them take a system and actually be very successful with it. And so I found that really valuable. The other thing that was quite valuable is, one of the things I've struggled with personally as a value investor is not buying on the way up. And they did not. Yeah. And so if their rules called for buying more, they would pile into this up to a certain point, up to where their risk management said that they should stop, and then they would just leave it alone. And then the other thing that I found really useful from this book, just as a trading paradigm, is they never tried to catch the top. Because when you try and catch the top, you're going to be unsuccessful, right? So their idea was they're going to give back some trades until their system hit and told them to get out. And sometimes, unfortunately, they would give it all back. So their stock, or what they more traded was, commodities and futures and whatnot. Their future would have a huge run up, and then all of a sudden it would start to dip back down, and then they would be giving back all those gains that they had. But if the rules said to stay in, they stayed in. That takes some fortitude.
All that to be said, you don't want to go. We're not doing like a deep dive.
No.
What are you going to rate that book, The Turtle Trade?
So essentially, because I learned a fair amount just of conceptual ideas from the turtles, the turtle idea, and some trading concepts, I would give it a good 6 out of 10. So it was better than average, but if they had explained the concepts in more depth and whatnot, I probably would have rated it higher.
Right.
Yeah.
And I guess we're kind of rating it on, like, how much we enjoyed it, and then also what we learned about it.
Yeah.
And so,
it was a great read. I really enjoyed reading it, but the actual content to actually teach you, other than concepts, just it wasn't there.
Yeah, and I'll say for the book that I gave a 3, part of the reason is, like, it's hard to give a book a really high rating when it's so hyped up, and then you read it and it's a massive letdown.
Yeah.
And so, like, for me, it was like everyone, like, was like, oh, this book is so great. And then you read it and I'm like, what on earth? Like, yeah.
No, this book, my book, was quite good. If you can find it at the library, definitely, or if you can find it on sale on Amazon, definitely get it. It's worth the read.
It's worth the read, for
You'll
sure.
learn something.
Yeah, and you can read it so fast.
Yeah.
Very fast. So book number 3 is called The Sleuth Investor by Avner Mandelman.
I think so.
Okay. And so, funny enough, when I ordered this off Amazon, my daughter saw it and she was like, this looks like a really fun book to read, but I know if I read it, it'd be boring.
The cover is quite appealing, although it's a little bit funny, the guy on the phone.
Yeah, okay. I actually found this book from you, who found it from a guy on X, who put a reading. And I thought, The Sleuth Investor. And I thought, I'm going to look into it. I want something new to read. And man, it was so good. It was so good. And it was like right up what I like to do. So the entire book is on scuttlebutt, just really, really deep scuttlebutt, and truly investigating, not just doing a Google search.
And this is like beyond scuttlebutt. Like we talked a little about. We talked a little bit about our scuttlebutt, but it makes us look novice.
Okay,
which we are compared to him.
Yes, so this is like borderline stalking. Like there's sometimes I'm like, you are like legit stalking those people.
You're like on a fine line from breaking the law here.
Yeah. But wow, like doing this intense scuttlebutt for this author paid off bigly. And I love a good story. like good stories are just something, they're fun to read, they're fun to learn from, and there are so many good stories in this book. The one thing I will say negative, I didn't like his writing style. And again, I said to you, I said it's almost like he's writing a paper for a teacher to grade. Like, I got to get those extra words into me. You know, like when you have a 10,000, 20,000 paper due, and you're
and
like,
you inflate the words.
Yeah, you inflate and you wax eloquent because you're like, I got to get this grade, and you're watching your word count go up. I just got like the writing style I didn't love, and he always put stuff in brackets, and I it's like, just if you have to put it in brackets, like once or twice is okay, but every page there were like 3 sentences that had brackets, like just omit that. So I actually found like halfway, or maybe like more like a quarter of the way through the book, I just stopped reading what was in the brackets because it broke the flow of the sentence, and I don't like that, because once I'm reading and I'm in the flow of the book, I want to stay in it. So I just, if I saw brackets, skipped right over and kept reading, and I didn't miss much doing that because it was never really important to the purpose. So the writing style was like, it wasn't so bad as competitive strategy because it wasn't written like a textbook. It was just a little wordy and sometimes just a little like, you just really didn't need to put that. It didn't add to the story. Now that could just be like my Twitter brain. Like, I can only handle so many characters now in a sentence. So I'm sure if people from 1950s, 1930s read it, they'd be like, it's not wordy enough. Because you read some of those like old books, like the Ben Graham books, and they're really wordy.
Yes.
So anyways, but the content was so good, and the lessons. So here's an example. I'm not going to go into his stories because I don't want to ruin the book. But if you don't even Scuttlebutt and you don't think Scuttlebutt is important, the stories are just so fun. You should read it anyways. Like, the stories are just so fun to read that even if you're not going to do that, even if you're not going to stalk CEOs or whatnot, it's still fun stories to read.
Right.
But one thing I love for me is I'm reading this book and now it's in my mind, like, you got to do Scuttlebutt, you got to do this, you got to do that. And the other day, and we do it, but not to the extent that this guy does it, not even close. And we're talking like he would hire people to like stake out truck drivers, like transporting stuff and whatnot. Like, he really dug deep into staff members and these companies and whatnot.
That's the whole point of doing that deep Scuttlebutt, is to gain an edge.
But the main point in the book is that most analysts and most people in finance look at companies as numbers and symbols on a page. And he actually realized Scuttlebutt was important when he was a finance student.
Oh.
And they had to do a project or something. I'm going back to the beginning of the book now. And they had to like investigate and look into a company. And he realized everyone in his group was just looking at all the same things. They were looking at the quarterlies. They were looking at the annual reports. They were looking at all the same ratios. And he thought, well, how are we going to do well here if I'm looking at the same thing as that group's looking at? Like, we have no advantage. And so he actually did his first Scuttlebutt and his first like deep dive while he was a finance student, and he did really well doing that. And he realized companies are organisms. Companies are more than numbers and symbols. And if you want an advantage, those numbers and symbols are not going to give it to you because everyone has that.
Yeah.
So that was kind of like the start of where he realized really investigating, like really like Li Lu type. Like, Li Lu always says you have to be an investigative journalist. This guy is like an investigative journalist when it comes to... It's
almost like a PI, private investigator.
He hires them.
Right.
He'll hire them. Like, he'll say it's worth the money to hire a PI to look into things and people and whatnot. So, anyways, I love the book because it reminded me, like, my Scuttlebutt sucks. So, like, I need to do more. It reminded me that, a company is way more than symbols and numbers. And 3, like, I have no informational advantage if all I'm going to use is the internet.
Because everyone else
every
is
other
the same
person
thing. ChatGPT is the same thing.
That's investing. Or every other retail person is doing the exact same thing. And if I want to have an advantage, I've got to either A, be like the smartest person in the room, which I am not, and be able to like parse through all those and pick up accounting things that other people can't, and I'm not that person. Or I've got to like get my hands dirty and get out in the field. True. And that I can do.
Yeah.
It's changed the way I've thought because I need to be much more thorough in my Scuttlebutt, and if I want a real edge, I have to be willing to do things that other people aren't. And I don't think other people are willing to like just sit in their car and count pellets and watch what comes out of trucks and go in and kind of be obnoxious and be like, hey, can I ask you some questions? So anyways, all that to be said, that is what the book has taught me. The book is awesome. It's like a fantastic read. I'm going to give it a 7.5.
Wow. Only
because the writing style was subpar, in my opinion. And I wish it actually had a few more stories because his stories are actually like so fantastic.
Interesting. So you'd recommend it?
Oh, highly. If you're a trader, maybe not. But like if you're a trader, the stories are still really cool.
Yeah.
But if you're a buy and hold long-term investor, it is 100% worth the read. It is worth the time and worth the money.
Okay.
I should say also he uses that information to short.
Ah.
Which we don't short. But I was like, why don't we? Like if we can see something, if we have an advantage in something, so we have a few companies that are public that are run out of our province. They're incorporated here and whatnot. If we saw something at one of them that we knew like, oh, you know, XYZ company is going to run into trouble, why not short?
Yeah.
So it kind of opened my eyes up to like, why am I not shorting?
Why am I long only?
Why am I long only?
Yeah.
So anyways.
Funny you say that because that's actually one of the things that the Turtle book taught me is you can be on both sides of a trade. You can be long or you can be short.
Right.
And the interesting thing about taking the other side is it actually, in a sense, protects your downside. Mm-hmm. So if you are, long only, if the market goes through correction, well, there's a good chance you're going to lose money. But if you're short, there's a good chance your short is also going to tank. So yeah, your bullish stocks are going to drop, but your bearish stocks are also going to drop too. So it can be some downside protection.
So anyway. It's interesting again because like again with value, it's like don't short, infinite loss, and it's like it's not infinite loss. Unless you don't close out your position.
No, exactly.
And there's just so many things in the value kind of world, and I think it's just because there's such a cautious group of people. Like we're naturally more cautious on a lot of things in life. But I think that book just opened my eyes. Like if you have an informational edge about a company and it's flying high, and you're like, no, this is like weird. Like shenanigans are going on or something. Why not?
You hear they're painting rocks gold.
Yeah, that story was like, I was like, whoa, and killing people who look into it.
Yeah, so from that standpoint, that's a company that should be shorted.
Right. So anyways, it was really good because it reminded me like, wait, I can like branch out of my comfort zone here, but I can also do better. Yeah. Like for me, like you're not, like I realized like I am not doing enough. Like I'm being lazy. I'm a lazy scuttlebutter.
So my book was How I Made $2 Million in the Stock Market by Nicholas Darvis.
From the library.
Free. So it cost me nothing. So this book was actually also very interesting. It was along the same theme of more kind of trading books, and I'm not sure how it got on my radar. I don't know if it was a book recommendation, maybe. I honestly don't remember. I wish I could say, but anyway, it came on my radar somehow.
I think it came on our radar from Amazon because when we order books from Amazon, Amazon pushes books that like, hey, you might be interested in this. I think we saw it there.
It could be. So Nicholas Darvis was a dancer. He had no experience whatsoever in finance. And this book was also a very easy read. And it essentially journals his entry into the market in the 50s while he's on tour dancing and performing and what have you. And he goes through how he legitimately made, at that point in the 1950s, I think it was from the mid to late 50s. I want to say he's 56 or maybe 57 to 59 or something like that, how he made $2 million in 18 months trading in the stock market. And it was impressive, actually, what he figured out. It was a very easy read because it was essentially just journaling his ups and downs as a trader.
He was a good writer. I haven't finished it, but I said to you right away, I was like, I love the way this guy writes. He just gets to the point, and I love it.
Yeah, it was a very easy read, and you can, it was almost palpable his kind of emotion as he's trading and stuff like that. And so initially he got into the market kind of by happenstance, I think. If I'm remembering correctly, the story goes that the people that were supposed to pay him for a dance act paid him in stock for some reason.
That's right.
I don't know if they didn't have the money. And then that stock happened to do really well, and he sold it and thought to himself, hey, maybe there's something to this market thing.
I'm a genius. It's kind of like, it's one of those things, like the worst thing that could happen to a trader is they make lots of money the first time.
Right, and that's exactly what happened to him. So then he started to go into the market himself, and he figured it out over time, and it gives you kind of the strategy as to how he did that.
But
and then
he lost a lot of money.
He lost a lot of money initially, which he goes through all that as well, until he came up with his box theory. So he describes his, what we call a Darvis box now. And I think people still call it that because he was kind of one of the first people to notice that prices have a trend in a sense. And so the idea was that he would watch a stock for quite some time, and if it formed boxes, he described them like boxes on a pyramid, and they would often trade within a specific range. And if they started to break out of that range, he would buy it because it meant that it was probably going to go up and continue to go up. And he noticed that, which we have also noticed as of late, that stocks which are traveling in one direction seem to want to keep traveling in the same direction. Or as one person put it, it's easiest to ride a horse in the same direction it's been going. And so from that standpoint, he noticed that early on. So if a stock traded within range, it started to break out of that range, he would buy it as it broke out. And then if it dipped back into the range, he was out. And so he also developed not only a kind of a breakout strategy, buying breakouts, he also developed a risk mitigation strategy based on his prior losses, having ridden things up and then ridden things down to, significant losses.
Yeah.
And so the essence of it was he would buy, within a breakout, and then he would hold it. And he said, why am I selling a good stock? And he talked about how he sold some good stocks early, only have them continue up their upward trend. And again, he wouldn't ever get out at the top, but he would get out as it started to dip down. So he would give back some of his gains, but it would have been better than if he tried to, pick the top and missed out on another significant upside potential. Because it was the 50s, information was transmitted very slowly at that time, which does...
And commissions. In the book, he talks about
the commissions are atrocious.
It's like, if there's any reason to read about older traders, is to remind yourself, like, man, we have it easy.
Oh, I mean, for us, I think our commissions are bad because it's $10 in and out with our...
It's horrible.
Our banking system.
But then you read his, you're like...
It was $150 in and out.
Yeah, I thought it was $250.
Oh, some of them were. Yeah, like at some point, it's like... Especially with the smaller stocks, because it was a base fee plus a certain amount of the number of shares. Mm-hmm. He actually came up with a strategy to buy higher price shares to save himself on commissions. So, I mean, it makes sense, right? Why would you buy, a $30 stock when you could buy a $300 stock and save yourself on commission? So he was very commission aware or expense aware.
Well, you would be. We're commission aware at $10 in and $10 out. Never mind, and that doesn't include options. These are just like buying shares. Yeah. Options are even worse where we're at. But I can imagine you would be very aware of commissions when you're paying more than $100 on the in and out.
So the other fascinating thing was, as I mentioned, information traveled really slowly. And so for him, as price was continuing to creep up, the greater fool theory, yes, comes into play. But what actually happened underneath the surface, there was positive developments happening in some of these companies that he had knew nothing about, for two reasons. One, information was disseminated slowly, and two, he wasn't even in the country for most of it. Right. He was actually trading by telegram a lot of his trades. He would telegram his broker back and forth. It wasn't even a fax
machine. Can you imagine? Like, that's so foreign to me. It's like, that's like phone bye. Like
his broker would literally telegram him gibberish to anyone who didn't know what he was talking about. He would telegram him the ticker and then the high and the low and the close for every day for whatever stocks he was watching for that day, because he had no other way to access the markets other than that. And I think he had a subscription to, I can't remember if it was Barron's or something like that.
Moody's or something.
Or whatever it was. And so he would get that whenever it was released. They would FedEx it to him or whatever the heck it was at the time. So the point being is, information was disseminated much more slowly then. But at the same time, stocks were responding to this information under the surface. And I still wonder whether or not some of that stuff still happens and works.
100%.
So there is that greater fool theory, and I want to address that for a second. I think there is that greater fool theory that drives, prices in terms of there's buying begets buying and whatnot and momentum. But for some stocks, I wonder if there's something beneath the surface that people know something and it's not maybe widely disseminated.
And that's what the sleuth investor would say there probably most definitely is. And what you have to do is figure it out. But that would be back to Darvis. Like, there was stuff going, someone knew something, which was pushing it up.
Yep.
And the sleuth investor would say, be the person who figures it out. So unlike Darvis, you're not just going on momentum, you're going on momentum and information. Which is the best combination.
Yeah. Because you can read why the stock is appreciating in that respect.
So all that to be said, out of 10, what do you give How I Made $2 Million in the Stock Market?
It was a really entertaining read from a bygone era, essentially, of traders or a trader who happened to make it in this respect. I really admire Darvis because he had no finance background and he was working at a colossal disadvantage, if you want to call it that, to the point where he actually moved closer to New York. He moved into New York into like an office setting at one point. It actually did worse because he thought, oh man, I'm doing something. So if I move closer to the action, I'm actually going to do better. And he did worse. So he moved away again. And he concluded that his edge was just watching the prices. And one of the things I took away from this book was a lot of people talk about charts and whatnot, but I think there was no mention of Darvis ever reading charts. I think he just read the numbers and read the tape. And Jesse Livermore said the same thing. And Darvis came to the same conclusion Jesse Livermore did. And he said, I could just feel my stocks. Like if they behaved a certain way, it wasn't a surprise to him because he expected it. Because he was so in tune with their movements. That's the same thing that Jesse Livermore said in The Reminiscence of a Stock Market Operator. He could just read the tape. And so it wasn't necessarily about charting and whatnot. And so that's one of the takeaways I took from that. And that momentum is actually a legitimate strategy potentially. So I digress. So what do I give the book out of 10? I'd say I'd give it about a 6 out of 10 as well.
Okay.
It was a really good book. And the only reason I give it a 6 out of 10 is because I'm not sure there was enough in there to implement a strategy per se.
That's fair.
I think there's a lot to be taken from it. For me, it was a springboard to look more into the momentum idea and to, kind of momentum trading in general and whatnot. So from that standpoint, I really enjoyed it. And I think if you can get it from the library, absolutely take it out. Take the time to read it, no question.
Okay, so to summarize, we'll just go through the books and what we gave them. So, Competitive Strategy by Michael Porter, I gave a 3, simply because it was just a massive disappointment. Too many people loved it. It's like going to a movie that everyone hypes up and you go and you're like, maybe I'd give it more if I hadn't heard of it. I don't know. I didn't think it was worth the money, nor do I think it was worth the read. Next book, The Sleuth Investor, I gave it a 7. I loved it. If you are into Scuttlebutt, it's 100% worth the read. If you just want some interesting stories, it's also worth the read.
Yeah.
And then your books?
So my books, The Complete Turtle Trader and the How I Made $2 Million in the Stock Market, I gave 6 out of 10s. And I think if you can find them either on the cheap or in the library, definitely take them out. They're worth a read.
Yeah.
Go for it.
So that wraps up our podcast for today. If you can like and subscribe, that really helps our video, and we will see you next week.